Good morning. Happy Tuesday, Michael. This is Laura Fournier greeting you today, and we have a good topic that should be helpful to our buyers. So how are you today?
Great, Laura. Michael Kurtanik, Macintosh Realtors, doing great. We are in a really interesting real estate market, and it's so important for buyers to understand that this is not a very unique market, but it's simply that the real estate market today still has low inventory, but that's increasing, and interest rates are where they are now. So it's very important for buyers to get on a solid foundation, get the pre-approval, and let's talk about buyers and getting their pre-approvals. Laura, what can you tell us about how buyers can get off to a good start with that?
Well, thank you for that little market refresh. Just to add a little bit to that, we did have the bond market go up last Thursday.
Yep.
And we should be seeing some better pricing. That means rates and the cost of the rate should be getting better. And that should help some buyers with getting qualified for a little bit more when the rates have come back a little bit. It's not huge. We're still near the top of Mount Everest, but nonetheless, we've come down like a base camp level. So
There we go.
Still near highs for what we've been used to, but we've come down a little bit. So a little bit of excitement to be able to share that. So today I thought we would talk about things that a buyer should not do while in the loan process, because when these things happen, when these things happen, it makes a mess with your loan approval. So we can have somebody that got approved prior to you taking them out house shopping, and then they do stuff not thinking about how it will impact the loan, and then we find out, usually the hard way, and then we have kind of a mop-up job to do, and sometimes we can't pull the file back into approval depending on what they've done. So I just thought we would go over some of those things.
So Laura, you're telling me that buyers do things prior to or after they talk to you and we're looking at houses. Buyers do things that they should not be doing. Wow. So
yeah,
I can't wait
I know,
to hear
it's like
this. Yeah, okay.
so
Since I don't get involved with anyone's finances, tell me what's the most common thing that you have seen historically, Laura, that a buyer has done that they should not have done?
Well, I think the biggest thing that they do is open new credit, specifically buying things. Like, I do remember this story quite a long time ago, but I was in the business and I was doing a loan for my very own brother, and he came by the house to drop off some paperwork because this was a while ago, and he rolled up in a new truck, and I was like, I had the front door open to let him in. I was like, what is that thing? Tell me that's not yours, like you had to borrow it. Oh, I bought a new truck. What? I hope your mattress fits in it, is what I told him. Oh my goodness. Terrible.
Yeah, the buying power goes down, doesn't it, when someone takes on a new credit?
Yes. Not only
crazy.
that.
Yeah.
So
yeah, for
then
me,
we have to add that debt into their debt to income ratio. And your debt to income ratio is the total house payment plus all your monthly obligations divided by your gross monthly income. So we have to add that new debt in, and that can make somebody not qualify. So I had
the
that
most
happen.
common thing I've heard in my experience. The most common thing I've heard is people would go out and buy a car and not pay cash. And that is so common that we either wait till it gets paid off, wait till it gets adjusted, or we adjust the spending limit on a house because of
Yeah.
what they did.
Yes, but if we find out and they're already under contract and they don't qualify any longer, they can go take the car back and sell it. Some dealerships have whatever, a 5-7 day policy that you can take it back with. And then I did have a client do that at the beginning of the year. Maybe a family member can buy it from them and take the obligation off, but that can be a real mess. Now, what to do if you're thinking about buying a car is call your loan officer and see if the new payment fits into your debt to income ratio. And if you still qualify, the better thing to do is to wait until after you settle on the house. So no new credit. And that
Excellent.
means like when you're in the checkout line at the store and they say, oh, you can get 20% off if you open up a store card. No store cards, no installment loans, no parent student loans, no nothing. Do not open up new credit, period. Don't even ask. Don't go shopping. Don't go on Amazon. Don't get tempted. Just huddle in your house and be really conservative and don't look like, the horse blinders that the horses wear in the races. Like that's what just have blinders on to all the merchandising and the marketing and the buy this now, we're going to give you a discount. No, none of it. None. So that's the number one thing to do. The number two thing is, do you want to guess?
Yes, I want to guess. How about the car payment stuff?
I'll give you a hint.
No idea. I give up.
Okay. Changing your job. Changing your job.
Right, sure.
So do not change your job. And changing your job would also include quitting your job. Do not quit your job. Even if we have loan approval, no, do not quit your job. Do not change jobs. Don't think that we're not going to find out. We're going to find out. So don't do it. And even if you're going to get a promotion, just call your lender, have the conversation, figure out if it can be done during the process or if it's better to wait. A lot of times, like you're getting a promotion, you're in the same line of work, you're going to get paid the same way, like you have a W-2 now, and your new job is a W-2, or the rate of pay is the same or more, and you're still going to work the same exact 40 hours. Everything is similar. It's just that you're going to have a different employer. Like all of those things are the same. It might be okay, and we'll say, great, you're going to make more money. We just need to document the start date and get a new paycheck stub for the new job. It could be okay, but if you don't have that conversation and then you change things, like you go from a W-2 to a 1099, that's an instant mess. Then we can't use that income when you don't have 2 years of 1099s, because that's self-employment. Maybe you went from in a government job and you have the same exact job and your backside is sitting in the same exact chair, but you're now a contractor, 1099. That's a no, that's self-employment. So have that conversation.
So it could, so it could happen that in the middle of buying a house and we're under contract and then they change jobs, that could upset the apple cart pretty significantly. And is it possible that they wouldn't get the loan and there'd be a delay? Is that what would happen?
Yeah, they might not be able to get the loan anymore at all. Like if they did go from W-2 to 1099. and say there was 2 people on the loan, the one person qualifies by themselves, maybe you'd still be okay. But if you needed that income to qualify and it's not the same structure, or they go from working 40 hours a week to a job that is variable where they don't get a set number of hours, it's like 32 one week, 29 the next week, 34 and a half the third week, that's variable income. We have to start averaging rather than just using a straight line calculation. So that could reduce their income by enough to make them not qualify. So
Yeah.
it can be very, very tricky. And then it's tricky to explain that to them, but you know, we can't follow people around. We don't know what they're doing when we're not talking to them.
Right, right.
So
Yeah,
have
if
the
they went
conversation.
ahead and, yeah, if they bought the pickup truck with cash, it might, that wouldn't make a significant dent in their loan approval process. It might show that there's less in their savings,
Mhm.
but, right, but they can still get the loan, right?
Right, as long as they still had enough cash to close, like
Yeah,
assuming they didn't spend their down payment on the truck.
right.
But yeah, if they had the money and they were able to, that would be fine. If they paid for the car with cash, that would be fine. As long as they had
Okay.
enough cash to complete the transaction, they'd be fine there.
Yeah. Okay, good. Okay, got it. Thanks, Laura. What's something else that a buyer should not do, whether it's right before meeting you to get pre-approval or during the home buying process? You mentioned already, you know, don't buy another car, you know, don't open another line of credit, you know, don't change jobs. What's something else that a buyer should
There's
not
some
do?
specific things with the person's credit not to do. Not only not open new credit, but make sure you're not skipping any payments on your credit. This seems obvious, but sometimes you're in the buying process and it's adding a new activity to your day and you forget. You want to set reminders that payments are due so that you don't accidentally miss a payment. You don't want to close out any credit cards. Even if you pay them to zero, don't close them because that could reduce your credit score. Don't pay off collections and judgments unless that's specifically tasked to you as something to do as far as maybe improving your credit. But don't just do it randomly. You want to have a thorough conversation about whether that's a plus or a minus to your credit. And, you know, so we walk people through that, but just don't just have more conversation, more questions about surrounding the credit and the credit scoring and everything. And with credit rescoring, don't expect a quick fix. Like if we are rescoring somebody's credit and we're taking the steps to do that, we got to follow all the steps as outlined, and there's a process. It's not instantaneous. It's not overnight. So you got to leave some time for that credit rescoring and working your credit to get your scores up. Give it some time to let it happen. I mean, if we're doing a rapid rescore, we probably need 5 to 10 business days, as long as we get the documentation, but it isn't an overnight thing. So you got to leave a little time for that. Another big thing that people don't think about is deposits to their bank account. So
What do you mean by that?
making non-payroll deposits to your bank account. So say you've been storing cash in your house, like people like to save cash in their house, and then they take that money they saved and they make this cash deposit to their bank account. Well, we can't trace cash. We don't know where it came from. So that is not a good idea because we can't use cash or untraceable sources of funds for mortgage purposes. So when you're going to make a non-payroll deposit, this is another time to have that conversation with your loan officer to figure out how we can use those monies, if we can use them, not use them at all, maybe get a gift or something. There's just times when you need to ask up front about certain things so that we can do it so it fits within the guidelines of the mortgage lending process.
Okay,
So
so let me ask you this. What about someone who's just fresh out of college and wants to buy a house, but they don't have any credit? They don't have, a visa. They don't have, maybe, they have bank accounts or whatever, but what if they don't have any credit to speak of? How do you counsel people like that if they want to buy a house?
well, we can, if they've had paid rent, maybe they paid rent while they were in college. If they've had any sort of trade line, like they've had a cell phone agreement and they've made payments on their cell phone. If they were living in the dorm and they had to have not in the dorm, in like off-campus housing, you had to have utilities in your name. Somehow, if we can put together some alternative credit, we can build a credit file for them. Many times I will see if they can be put as a borrower on one of their parents' credit cards and kind of bring that credit history in that way. So there are some ways that get a little tricky and complicated, the building the alternative credit. It's possible, but sometimes we just get them to open a couple of credit card accounts and you wait 3-6 months and solve it that way. So there are ways. It just depends on each person and what they've kind of been doing over the couple years, if we can create a credit profile or not.
Yeah, and if they need more time and you recommend some things, and they just have to wait a little bit.
Yeah, sometimes you just have to put things in place and you just wait a little bit of time and then it's all fixed. I know when I was in college, I lived in off-campus housing, so I had rent and I had utilities, I had phone bill and all of that. But I did have credit, but if I hadn't I would have had a couple things that I was paying on regularly that I could have used to build an alternative credit file. So it's not impossible, even if you're a college student. If you're a college student and you graduate and you're going into like you're a nursing student, we use that college time frame as your job history. And then then you go into like you get your nursing job, we can use that right away. Like, you don't have to wait to have 2 years in nursing. We use the school as the education part.
Oh, good. Okay. So you told us about what people shouldn't do and have done and weren't supposed to. What can people do then to make sure they get off to a good start in the process of getting approval and buying a house?
I would say one of the biggest things to do is to talk to your lender and get in the loan approval process and let the lender look at everything that you have going on and do it early, even a year or 6 months in advance, and just tweak those little areas that need a little bit more work. I think that's the number one thing to do, is to really get good, strong, sound advice. I would say another don't that I don't have on my list is, don't take advice from unknown sources. You can get a lot of information on the internet, but not all of it is real or true or pertinent to that particular person. Also, there's a lot of naysayers in people's, even in their immediate family and friends. When somebody's going for a big goal and they really want to achieve something, and then all of a sudden the other people are like, oh, don't buy now, rates are high, or don't buy now, houses, cost too much, or all of those things. And you really need to consider the source of that. Does that person even own real estate? Have they ever owned real estate? Are they building a portfolio that is going to bring wealth to the family and change a whole entire family's profile. So, just be careful of people that are negative and are trying to push you back from your dreams. You don't want to take advice from people that haven't done it before, and just random advice from, the internet. Even if you can read up on a subject, you want to talk to a professional, somebody that's been in the business, somebody that gives you information, education, and is always available for good communication. And it just makes sense, it's logical, it makes sense. So
You're absolutely right, because sometimes, when people prepare 6 months, 12 months ahead of time to buy a house and they talk to a lender, sometimes even as simple as someone in Peoria has the same name as you, and something that they did over there shows up on your credit report, or something in the past where you were late a couple times. Well, those things can be kind of cleaned up. Better to get that done ahead of time before looking at your first house and falling in love with it, than it is to start the process and start looking at houses and then realizing you've got a couple things in your report that, unbeknownst to you, needs to get cleaned up and delays the process.
yeah, I would just, the sooner the better. Don't wait till the last minute and then you find out that you have to do all of these steps to clean up some areas, and then you're waiting even longer than you want to. So especially like with first time home buyers, and maybe your lease is going to be up in March, say next early spring next year, you want to be calling us now today to get started, because that's only 4 months. And if you need to move out, say the end of March, you need to be under contract and going to settlement sometime in March, which means you probably need to be getting under contract mid to late January. So you need to be calling us now and getting started now. But the sooner the better. Even if you don't want to buy till next June, it's not too soon to give us a call and ask us questions. So, yeah.
That's really sage advice there, Laura, because people think, oh, my lease ends in January, so I'll start like December kind of thing. And it's just like, well, yeah, hold on a second, time out, because maybe in the lease it says you have to give 60 days notice, or, in the lease it says that, you might get penalized, or they won't allow you to stay on month to month if the home buying process takes a while. So yeah, you're absolutely right. For those who are renting, review the lease, work with the realtor on reviewing that lease, and then get in to talk to you as soon as possible. Absolutely. That's good advice.
Yeah, I think what you just said was super important. Actually read your lease, like know what it says and know what steps you have to take. Because I think that's something I do see a lot on people's credit report. Like when they've moved out of an apartment and a collection is on there, maybe they paid all their rent, but maybe they charged them absorbent fees or something when they moved out, or they said they didn't get proper notice. And you want to make sure that you document that you did provide them with proper notice that you're going to be vacating. So yeah, reading the lease and understanding it and giving proper notice is very important. So that's all sorts of good things. There's so much to do. There's so much to know, and so many steps to take when buying real estate. But that's why you have us two professionals to help you, hold your hand the whole way and take you through the process. So just real quick. Yeah, go ahead.
Okay.
I was going to say, don't open new credit. Don't buy that car. Don't go furniture shopping. Put your blinders on to any shopping at all while you're in the loan process. And don't make large deposits. Don't change jobs. Have great.
You know what you just did there, Laura? You just put a wet blanket over my Black Friday next week after Thanksgiving.
Oh, Black Friday shopping.
No, oh, Laura, come on now.
Make this a small Christmas. Just make it filled with love with your family and not a lot of shopping. Oh, if my kids see this, they're going to know what's up.
Yeah, exactly. Exactly. Yeah, yeah. Uh-oh, mommy's moving. Uh-oh. We can barely fill her stocking. She's moving. She's buying a house. Uh-oh.
My kids are grown, so, but anyways, oops, I didn't mean to tell them that. Christmas is going to be small.
Yeah, yeah,
We're
yeah.
going small this year.
Yeah, and I think just to put my little spin on it, I mean, I always say to people, listen, when you're 80 years old and looking back on this time, you're going to be proud that you went small, you weren't extravagant when you were buying a house, you didn't open up new lines of credit, you didn't buy that truck, you didn't, do all the things that you said not to do. When you look back on it, it's just going to be a temporary thing. 2 months, 6 months, 10 months, just ride it out until you get the home buying process. Then after you buy the house, just work within your household budget. And again, when you look back, this is going to be fine. You're going to be fine. Everything that you're telling us, Laura, is just going to be a small part in the fabric of your life. So just listen to this advice if you're thinking about buying a house, and then you'll be that much better off in the future.
Yeah, and they can even start going small, staying away from the shopping. You can start that really early, maybe even a year or two beforehand to accumulate all of that extra stuff that you're not spending, you're not buying extra random things, and you save all that and you have either a bigger down payment or a bigger nest egg left over to do some updates and repairs for the house. So
Yeah.
yeah, it's all good. Like,
Maybe they can buy you that truck, Laura, for all the money that you saved them.
yeah. I'm just thrilled when I help another family get into a home. It's really exciting. It's so important to their overall future, and it brings a lot of stability to a family. So just remember all the things we said not to do, and on our in an edition coming up, we'll talk about all the things you can do to get ready. So lots of good information
So
coming forth.
yeah, so here's what we're gonna do to everybody who's viewing. We will include, if you comment below in on this video, when you see it on our respective YouTube videos, if you comment, we'll send you the list of do's and don'ts so that you can then have something that we, as a reminder of what we discussed. This way, when it comes time, you can just refer to that document. So comment, like, and subscribe to both of our YouTube channels, and make a comment, and we'll send you the document. This way you can be better prepared and you can start your home buying process off on the right foot.
Perfect. That is a perfect ending. We thank everybody, and we really hope to serve you as you are going for your goal of owning a home. Whether it's your first home, a second home, investment property, it doesn't matter. We're here to serve you.
You got it. Well, until next time, Laura, have a great week. Don't spend a lot of money unless you're spending it on me, which is, the sky's the limit for me. No problem. But to all of our viewers, comment for that list of do's and don'ts. And then, of course, subscribe and share. Okay?
Absolutely. Just text us do and don't, or email us, and we are happy to send that to you. Everybody be well. We'll talk to you next week. Oh, no, hitting the wrong